Welcome to the Strategy of the Week for the 2nd August 2013. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be providing your strategy presentation this evening. Last week, our Manager of Retirement Services, Mr. Dan Mish, showed us that market timing is one of the essential tools of any retirement trader's toolbox. VectorVest offers several timing signals and systems from which to choose. Of course, you can even create your own. Generally, aggressive traders prefer the faster timing signals because of their desire for early entries and quick exits, taking quick gains on volatile stocks. Conversely, conservative investors favor slower timing signals which allow them to stay in positions much longer because they're investing in safe, large-cap, dividend-paying, slow-moving, less volatile shares. This group will often trade a timing signal like the confirmed calls. Tonight we'll look at an out-of-the-box approach for the conservative income investor that uses a faster timing signal, in this case the Greenlight Buyer RT Kicker combo. Let's get started. We'll begin with a market timing graph, so from our home page in the program, we'll open up the Graphs tab, and I've opened up a price graph only of the VVC over the past 1 year. And let's overlay on top of this price graph our confirmed call signals. And of course the green triangles are the confirmed up calls, the red triangles are the confirmed down calls. The confirmed calls do a very good job of keeping us on the right side of the long-term market trend, a critical consideration for a conservative investor whose primary consideration is preservation of capital. They do come with trade-offs. Because of the 2-week rule, they tend to come a little bit late after the turn for the entries and also for the exits. And this is by design. By waiting a little bit longer, we're confirming that the trend is likely to continue. Get me in early enough to still get some gain, keep me out long enough that I can be confident that the trend is established. And so you might miss a little bit of the market move at the turn, and you might buy back into the market at the market's top, or at the mature stage of the run, or even slightly after, as well as giving back a little bit of your gain as the market falls before you reach the signal. To minimize this effect, we learned early on to look for a short-term indicator for confirmation of the trend before we would replace. Typically, we use the primary wave, our fastest trend indicator. So if I was in a confirmed up call and the primary wave was still up, it was okay to replace. We carried this concept or this approach forward to our Greenlight Buyer RT Kicker combo timing system, where we coupled our much faster Greenlight Buyer timing signal with the slower RT moving average crossovers for confirmation. If we overlay those signals on our price graph, you can see we now have a much better defense against buying back into those topping markets, and we even get in a little bit earlier. The problem you would expect by moving to a faster signal is that you'll get some quick changes of direction, which would be whipsaws for the long-term trader. So tonight we're going to explore the idea, instead of exiting and going to cash on these red lights, we're going to hold through them and manage our positions on stops, and only acquire new or replacement positions when we get green lights. This will allow us to ride out any whipsaws or retracements in the market action with our safe, low volatility, steady eddy shares, which hopefully will not drop as far as the market. We'll hold our positions longer and we'll capture more dividends. To test my theory, I'm going to set up a series of back tests. For our test bed, let's change our markers back to confirmed calls. I want to go back to the first confirmed call of 2012, which was here on the 27th of January. And we'll run forward to last Friday, 26 July. And what we're going to test are the same runs that Dan tested last week. So we go into our Unisearch tool. We'll open up the search toolbar and we'll scroll down to the searches retirement, and we'll run each of these retirement searches with the exceptions of the high yield 2x10s and 2x4s, which had very thin returns in the Australian market. So turning to my back tester, we'll click on backtest an idea. We'll leave our default account settings at a $25,000 investment, $20 commission per trade. For market timing, we're going to set our base runs with confirmed calls, so we'll run each of our searches now using the confirmed call timer over this time frame. To be able to include these market timing signals in your test bed automatically, you do need to have the auto tester module. There is a 2-week trial available for it. Should you not have it, just contact us in product support for that. We're going to run confirmed calls And on the confirmed up call, we'll click here and we're going to scroll down to our search and we'll buy long from the Searches Retirement Group, dividend bargains. For stop criteria, we're going to go simply with a recommendation equals sell. And in more settings, we're going to do a portfolio of 5 positions. Buy all 5 immediately. Don't close any open positions when entering the situation. Invest average portfolio value. Odd lots, limit repurchases to not buying back the same stock for 31 days. And we'll leave the rest of the default settings as they are. For the confirmed down signal, when we reach that signal, we'll go to cash. And our test period, again, 27 January to last Friday, 26 July. And let's call this dividend bargains. And we'll click finish and run. You can see that overall we had a return of 6.81%, which averaged out on an annual basis at 4.5%, with a maximum drawdown of 12.92%. Looking at the equity curve, we can see the first 2 turns really traded sideways, although we gave back a lot on this first turn of the market as we were waiting for that down call to signal. The next turn we finished a little bit ahead of where we started. Very nice turn here on this next run that we had at the end of 2012 into the 16. And of course a nice turn on this last confirmed up call from the 12th of July. And of course I've not optimized this, tried other stops. I'm just coming with a pretty straightforward recommendation equals sell approach, just so we can benchmark our performance and compare it to our modification. Well, next, through the magic of time-lapse photography, I need to run all of those other searches against the confirmed calls, and let's take a look at our combined results. Here are our results for the rest of the searches in that search group. And we can see that some did better than others using this recommendation equals sell stop criteria. Dividend Elite gained at 21.34%, with lower commissions averaging 14.28% per year and a slightly higher drawdown at 15.37%. High Growth Dividend gaining just about the same at 21.35 with similar data for total commission and annual rate of return, with a slightly improved maximum drawdown of 14.66%. And a very nice equity curve remaining above water the whole time, each turn having a higher close than its entry. High VST plus YSG stocks a 1.68% gain, only $780 in commissions, but an annualized return of 1.13%. And finally, top performing dividend payers up 23.67%, total commissions of $820, 15.83 average annualized rate of return, and a 10.4% drawdown, some of the nicest performance from the group. Looking at its equity curve, it too struggled a little bit in the beginning, but was able to make higher highs on each of its turns, actually struggling a little bit in the current market turn. So this is our baseline performance for each of these searches using the recommendation equals stop on confirmed calls. You can see we get a confirmed down call, we go to a flat line where we're sitting in cash. And so for our next run, that's the only variable we're going to change. So we'll come back up to dividend bargains. We'll click copy. Instead of confirmed calls, we're going to use now our RT Kicker combo system. So for the rules up, this is the green light, the confirmed green light in the combo system. We're going to buy long. We're going to buy dividend bargains. The recommendation equals sell stop stays in place. The more settings stay exactly the same. For automation rules down, instead of going to cash, we're now going to take no action, which is also the rules that we'll use for the neutral signals, the yellow signals, which means we're just going to let the stocks be managed with their stops. So we're still managing risk. Should a downturn ensue, the stocks will still stop out at their sell recommendations, but we're giving them some room to breathe because these are high safety kinds of stocks. Our time frame remains the same, And we'll just give this name Dividend Bargains Copy as our second pass. We'll come down, we'll click Finish and Run. And here are the results. So the same settings, we can see that our percentage gain loss jumped from 6.8 up to 59%. Our commissions were cut in half from 59 trades to 31 trades. We have an average annualized rate of return of 39.68%, and the max drawdown fell from 12.9 to 10.3%. If we look at the equity curve, we were sideways here for the first quarter or so of the test. The worst we were down here was around 4%, but remember, compared to the original run, replacing positions as the market was falling, we were hitting our recommendation equals sell until we finally got to the confirmed down call. That resulted in a drawdown now of 9% on the portfolio, which of course becomes our starting point for the next run. In our second test, because we stopped getting replacement signals, we stopped replacing positions as the market trend was starting to slow down and that uptrend was starting to mature. And so the positions that were left, we did pull back a little bit, but we never got down more than about 4%, which set us up for the next rally that ensued. And of course, those positions that did weather the storm, we continued to collect dividends. And that resulted in this beautiful equity curve, which of course does not include dividend income. This is only on the capital side of the stock price performance. Now, while I didn't break down into the trade history to actually see which gains I captured, if we look at our current holdings, and we'll go to the watch list view, we can see of the 5 positions that are in the portfolio, if we look to the yield, we do have an average yield somewhere probably in that 4% range. So the next step in our research is to repeat this process with the remaining searches within the group. Through the magic of time-lapse photography, let me show you those results. Our second pair, Dividend Elite, our gain fell from 21% to 11%, but our commissions also fell from $900 to $600. We did pick up quite a bit more drawdown though at 29%. Again, please remember I didn't optimize these results at all. I just randomly picked recommendation equals sell because that usually works pretty well with long-term holds kinds of trading plans. Our next pair was high growth dividend payers. Our gain jumped from 21% to 48%. Commissions fell from $900 to $420, with a slight increase in drawdown from $14.6 to $15.8. Next, high VST plus YSG. We picked up a gain from 1.6 up to 4.1. Commissions down from 780 to 380 with an 11.5% drawdown. And finally, rounding out the group, top perform dividend payers, our percentage gain rising from 23.6 to 25%. Commissions falling from 820 to 700. And our drawdown did jump from 10.4% to 23.29%. When analyzing data sets such as this, sometimes it's easier to look at averages, so I prepared a table. Here on the table we have each of the searches that we ran, the return on the confirmed call signal and the average at 14.97, the return using the combo timer averaging at 29.69. Calculating the difference, then we have an average gain of 18.84% of improved performance using the combo timer. Of course, we saw also universally, save for the dividend bargains strategy, we saw an increase in max drawdown in each of those as well. And of course, we see here at the bottom, to keep it in context, the VectorVest composite, the broad market, rose at an annualized average rate of 4.66% in this same time frame. And so no matter which methodology you use, you're handily outperforming the market on a capital side. Of course, we're not including dividend income here again. But the question I pose to you tonight, does the increased performance with its increased risk warrant the creative use of the market timing signal? Well, I'll have to leave that one up for you to decide. And of course, VectorVest provides all the tools that you can come back and try to optimize some of these trading plans so that you can make a more informed decision. But I'll have to leave you there. I appreciate you being with me for this strategy presentation this week. If you have any questions, of course, please contact us in the product support department. And come back to review this and any of our university presentations at vectorvest.com/VV University.